Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, June 23rd. Firstly to the S&P 500, and here we see the trend continuing to the upside for today. The current candle forming a higher high and a higher low. Very strong buying coming into the market today, bouncing off the 2093 previous level of resistance. The buyers strongly in control, strongly committed, as evidenced by the large size of the range here, the large size of the white body of the candle in the market closing up at the high. So strong commitment. Strong net momentum to the upside, and the buyers closing with very strong control. Now we do have some potentially strong resistance overhead, extending up to that major high around 2134. Whether the buyers have built enough momentum to trade up through that area remains to be seen. There are three levels before we trade to that region, so we are going to have to see a continuation of that strength from buyers. Now, what's not reflected here is the latest polls, or the earliest polls with the Brexit vote in the UK, and it is suggesting at the moment that the exit vote is slightly stronger than the Remain vote, and that could have ramifications for financial markets. And we'll look at the S&P 500 futures in a minute, and we are seeing that there is some selling coming in to the S&P 500 futures, so we just do need to be very cautious. But as this market has closed, we have seen the buyers take control. Very strong buying in terms of Ichimoku, with the market trading above the cloud, the Kijun-sen, the Tengen-sen, and the Chikou span is very strongly reflecting this solid upside momentum. And look into our bands here, and there was a possibility as the market had retraced back to within the bands and was finding support down at the lower bands, that we weren't going to see a resumption of this strong bullish tone to the market, but we have seen that somewhat. The bands were squeezing up. We've seen a strong bullish breakout to the upside. What we want to see is strong follow through and the swing high up here, roughly about the 2120 mark, taken out in a bullish manner. So we want to see strong bullish follow through to confirm. And a lot does depend on the next few hours or so as we get the results of Brexit. So we're still a bit too early to call, but as I've mentioned, numbers certainly aren't favouring a nice extension of this trend to the upside. Now, if we just look at the S&P 500 futures here, and just looking at the session that has completed, the session that completed was trading above the Ichimoku cloud for the entire day, rallying solidly off Tengen-sen and Kijun-sen support, highlighting a very strong market in all three timeframes, testing to the second pivot point resistance level, coming off, finding support at the Kijun-sen, bouncing off there, breaking out on a very strong bullish candle, and trading to the third pivot point resistance level. Now, as I mention often, when we do end up trading to or beyond those third levels, it does tend to reflect an extreme day, and we don't tend to see strong follow through. But if we look at the new session as it's opened, for the past 3 hours, we've seen strong selling. The market was looking a little overextended in depth above the Ichimoku cloud. The Ichimoku cloud was very thin, and now we've seen a change of sentiment in all three timeframes, with the market trading well down through the Ichimoku cloud. We are trading towards that third level, so we are likely to see an extreme day today. We're not likely to see strong follow through for the next day, although that doesn't always remain the case. But when we have a market shock, that's when that throws all of that out of whack, with this idea that the third trading to the third pivot point resistance or support level has ramifications for the next day. The important thing here is we've seen, as the market's been trending down, we've seen a good extension to the range, suggesting that the sellers are very, very eager and becoming even more eager. But this range of this candle is looking very, very overextended and a little overdone. And at the moment in this candle that is developing, we are seeing something of the start of a loss of commitment here. So a lot depends on the polls for the British referendum, whether to exit the European community. And I think we just need to be very cautious over the next few hours. The sentiment indicators, and just looking at the VIX indicator, and the VIX had continued to come off, and the VIX moved down below its 50-day moving average, its long-term moving average and below the shorter-term moving average, and is suggesting that for the session that has just closed, that traders were feeling fairly comfortable with the price appreciation and there wasn't any great fear in the market. Also, the oscillator had moved down below its minus 5% warning level, and we can see that the RSI of the VIX indicator had moved down from an overbought position. So this was suggesting that traders were feeling fairly comfortable with the rise in the S&P 500 that we saw today. But if we now look at the VIX Futures, and here we see for the current session, we're looking at the bands here, the breakout to the downside. The VIX Futures for the session that has finished trading down to that third pivot point support level, an extreme day in terms of trading down there, and no strong follow through. And in fact, we've seen the VIX moving significantly higher, well through the first pivot point resistance level, through the upper band, which is now fairly wide, and it is suggesting that we do now have some fear entering the market in terms of the equities markets, in terms of the traders, and is suggesting that there is perhaps some troublesome times ahead if the VIX vote certainly doesn't go the way that financial markets want it to. And at the moment, as I've mentioned, the Brexit vote is suggesting, on the British referendum, European Union vote is suggesting at the moment that the exit polls are leading. Just looking at our various asset classes versus the equities asset class, and we're comparing the bond ETFs, the gold ETF, versus the S&P 500 ETF. And here in the bond ETF, the 20-plus year Treasury Bond Fund, TLT is the code, we've seen it move down below the middle band here, and suggesting that that strong bullish tone that we saw previously is no longer in the market. The trend continued down in the first term time frame with the sellers in control. And if we look at relative strength versus the SPY ETF, the S&P 500 representing the equity market, it is trending down solidly, down below the window here, down below the bands. The bands had squeezed and suggesting we could see further downside there. But the momentum of that trend in terms of relative strength had been moving down, and it's now down below 100%, suggesting that the bonds, as at the close of the equity session, were underperforming, solidly underperforming the equities market. Now, just using the Optima trading platform and or charting platform by market analyst, and using the relative rotation graphs, and we're analysing in a similar manner to our relative strength versus the S&P 500 in terms of trend and momentum. And here we see that the bonds TLT is still up in the leading quadrant, but we see it coming off rapidly over the last 3 or 4 sessions, and it is moving down towards that weakening area, and is suggesting that we are seeing the beginning of the equities outperform the bonds, as well as gold and silver here, and both are perhaps starting to rotate. If we look at it, we can look at it over a period of time, and this is the beauty of using the Optima program, where we can actually just watch how the asset classes rotate in a cyclical fashion from underperformance to overperformance and back into underperformance, and we can use that for timing our allocation to our asset classes. Now, this is on a daily basis, and it can also be done on a weekly basis. Now, just also looking at the gold ETF, and very similar to the bonds, and this certainly did suggest that there was a strong flow of capital into equities, away from gold, away from bonds, and bonds as something of a flight to quality asset, and also gold as a safe haven. And we've seen for today's session a flight to the equities market. But if we look at gold futures and the new session that has just started trading, we are seeing perhaps a flight of capital to gold as a safe haven with regards to what's happening with the British referendum. And at the moment in this current candle it is forming, we have seen extreme trading, and we are seeing some indecision in the gold market at the moment, and perhaps this is suggesting that the early polls are now starting to change and starting to reflect that we are perhaps seeing a return of the vote back to Remain. So the jury is still out on that. We do need to monitor what's happening with the vote. But we saw that the selling in the gold futures on the hourly charts, especially throughout the second part of the session, testing down to the second pivot point support level. Then at the opening of the session, testing lower, but then rallying as we saw that vote start to come out with a bullish breakout above the bands here. And at the moment, the upper band is holding a support, and what we need to watch is whether we remain up above that upper band or if the market does trade down to within the bands. And at the moment, there's a possibility of the market trading within the bands, and as we watch it, we are going to test that upper band. And the question here is, will it act as support? And will the market close within the bands? And if we do close within the bands, it will suggest that the bit of a scare that we had with the Brexit vote is perhaps easing. At the moment, some buying coming into the bonds now and just hovering around that upper band. So we do need to be very cautious at the moment and just watch where capital is flowing to, and whether we are seeing a flight of capital into gold as a safe haven. And we had seen some of that, but at the moment it is starting to weaken. Now also, just looking at the various areas of support and resistance, and these are taken off the daily charts, and the market did break out through the 1273 level, had held as previous resistance, bullish breakout, and then for this current hourly session we did see the market trade up through the 1284.9, which has been an important level in the past, and being strongly rejected from there. So not only are we seeing the pivot point resistance levels coming into play, but those levels on the daily charts as well. And if we refer here to the daily chart, we have seen gold futures in the new session interacting with the Tenkan-sen as well, which was trading near that 1284.9 level and being rejected from there. So very important trading coming up over the next day.